600 Seconds of Trading. My name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain.com. And every Monday to Friday at 9 a.m. London time, we provide you guys with this quick update on the markets. And we'll take a look at things like the euro dollar, Bitcoin, crude oil, DAX 30, and um, what did I miss now? Must have been the DAX or gold. Anyhow, it's a few set of markets that we'll look at here in the early morning. Now, before we start, as always, I need to stress that trading financial markets is unfortunately risky and there's a genuine risk that we lose all of our invested money. So please bear that in mind. There's a link here, a risk disclosure statement as well. Don't forget to follow us on Twitter and as well on YouTube. Click down here and you land on our Twitter feed, which is Trade Captain CPT. In here, you're going to see technical analysis and macro fundamental analysis and breaking news. As an example, here's an update by my colleague Yuri on the pound yen. Here's an update from Vivek Odebarati on the Japanese yen or Japanese large manufacturing conditions index, and have the morning update, special stories, and so on and so on. So you really want to follow that, and then as well on YouTube. It's always good if you're trading and want to learn more about trading to link up with other people that are doing it already. Thereby, you could potentially become better in your own trading. Okay, let's begin. And this is the euro versus the USD. And the market is moving slightly higher today, which I think makes sense because the headline numbers on the non-farm payrolls were strong, but we're so late in the economic cycle that people don't really care too much about the headline inflation, headline number. Rather, it's wage growth and how that could influence inflation that is important. And just as we're heading into a recession, you'll see big declining numbers in the non-farm payrolls. That's one time when it's important. The second time when it's important, and when you start to see those nice, strong growth in headline figures after a recession, that's when you get the highest numbers in general. And after that, after the first, say, 2-3 years, the headline number says the flat line, and then it just kind of gives you an average of 200,000, 150,000, or something like that. And that just tells you that the labor market is growing with the same pace as the labor force. So in other words, the unemployment rate is going to pretty much remain unchanged. And that has been the norm. The unemployment rate has been unchanged for a long time in the US because we are already more or less at its maximum. So what people are focusing on is wage growth. Now, wage growth was good, but not as good as the market anticipated. And that's why we saw stock markets rallying. That's why we're also seeing the euro dollar move slightly higher today. So the euro dollar, I mean, we talked about it last week. I said that the market is trapped in this big sideways pattern and is supported by 2154 and limited by 2442 up here. And I think the market is going to continue to converge between these levels. And then at one point, it's going to break the upside or maybe break lower. But right now, it's just trending sideways, which means that we're probably better off not doing too much with this market right now. Now, in the short term, we talked about it last week as well. And we said that, as long as you're above these levels here, this market could go up higher. And that's what it's doing right now. But it's a corrective move following the ECB rate meeting. I wouldn't be betting on that move to the upside, but I do think it can go a little bit higher. And then again, we trap between this low and this high. Something we did do though, and we did a live webinar in this trading room. So we did it for free, and that is that we looked at the dollar CAD. So in the case of Canada, the numbers were slightly better, not hugely better, but slightly better. And the US data, as I said, disappointing. So here we talked about it, about selling here, and I sold myself here around 128.60. The actual low or breakout level is 128.66. The market moved down, and then when the market bounced back up again, I went short here. And here is a play on further further declines to the downside. And in essence, we rallied strongly, as you know. And then this is a major high. We pushed above it, and it looks like it needs some sort of a pullback. And a Fibonacci from this low to this high gives you this first fib. And around here, I think the market could potentially stabilize. So I'm short from these levels up here. My original stop was up here, and I pushed it down. And technically, as long as you're below this level here is 120 and 963, then there's no real worries. It could go up, but eventually I think it's going to go lower. If you want to know more about that video specifically is on the YouTube video. It's on YouTube. Click on videos up here, and here you go. This is the live coverage. We covered the known from perils many times, and we tend to get not all of them, but we tend to get them right. So it's a good way of understanding how I trade the known from perils. Just go to tradecaptain.com. Up here, you click on subscribe as well. Thereby, you get notifications of new videos. All right, back to Bitcoin. So Bitcoin managed to stage a bit of a comeback, a bit of a rally. So you might remember we're bearish from up here. So the market could go to the downside unless it would bounce, which it never did. Slice through below support, and market went down and up and down and up. So it took out to some extent the short-term downtrend, but I'm still not convinced that this market has bottomed out just yet. So I'm watching 101.58, so 10,158, which is this level here. Levels created in the morning of March 8th. So I think the market for now could revert back down to 8,700. If it takes out the high, it probably goes up a bit and then probably down, and then maybe I'll look to get involved. But for now, it still looks very fragile, and this was a little bounce, of course, and everything developed from a little bounce. But technically right now, it doesn't scream to me, buy. Even though I saw this, I had a feeling this was going to go up, and across many other markets as well. Yesterday, on Sunday, we saw strong gains, but we're not out of the woods yet. So I'm focusing on this high here. Here's US oil. We were trading down here, and I said it could probably go up unless we take out this level. But as I also said, probably not the best thing to trade. Why? Because the market is capped by this level, is sort of ranging, and then down here you can connect these lows, and it's converging into these sort of narrow range. And I think it's going to make perfect sense to either be say long, maybe short, but sorry, I managed to touch the microphone. But eventually, we'll have some sort of a breakout. I'm not convinced that if we take out this level yet, it's gonna be the move that I'm looking for. But if it continues to trade sideways here for another few days, we could potentially have a breakout, and that's it. I know for some of you guys, I showed this 100 times before. I'm showing it again. A very similar situation to what happened here in November and October. The market was heading to the upside, and we were actually bullish here as well. And then it was going really well, and the market started to trade sideways, and we lost on the long, we lost on the short here, in essence giving back some of the gains from earlier in the year. And then at that time I said, you know what, let's just ignore this market, and then we reached the upside. And you know what, it was super quiet when I posted this. It was December 26th, so obviously a lot of people were taking time off. And then I was telling people, this is gonna go up, this is gonna go up. And then obviously after it goes up, you see more and more people on Twitter to actually mentioning that this is going up. And that's actually interesting. It's all about price psychology. And when you go to a restaurant, you go to TripAdvisor and you make sure that you had maybe 1,000 people visiting the restaurant before, and a majority of them give them 4 or 5 stars. That lets you know that it's a good restaurant. At the same time, if you go outside and you see a lot of people queuing up for a place or a restaurant or visiting a shop, you think it's going to be good because there's so many people there. And usually that's the case, and that's how we human beings are wired to think. But in the financial markets, guys, it doesn't work like that. In fact, If you're buying when everybody else is telling you to buy, then it's usually at the end of a move. Um, and the Bitcoin is a very good recent example of that. And this as well is a very recent example. So many times I'll feel at least that wow, I am the only one to discover this trading pattern, and then I put it out, and then eventually when people move up, then people start to call me, send me text messages like, oh, should I be buying crude oil? I'm like, well, didn't you see my Twitter? I published that like a week ago. So remember that. Uh, when the idea you have is starting to become very popular amongst the crowd and people that don't necessarily follow the markets too often, then that's a big warning sign. Anyhow, the market's trending sideways. I think we're going to have a nice breakout like this, and it's going to be nice. Let everybody else get into trouble here, getting stopped out, losing money left, right, and center. And then when we have that breakout, I think it makes sense to get involved. For now, it's just trading sideways. Here's gold. So gold is a bit difficult as well, from my point of view. Not everybody thinks like this, but I don't like trading sideways markets. Uh, a few days ago, though, we said, if it bounces from here, it can go up. That worked out fine, and then it went down again, and it bounced. Now, it could easily come back down and challenge this low. Why? Well, because you don't have to buy gold now. Why should you buy gold when stock markets are rising higher and higher, and it's quite straightforward to trade them and make money on them. So people buy gold to protect themselves against high inflation and to protect themselves against stock market declines. We're not seeing none of that today. So this market could easily go down a little bit lower. But overall, because the dollar is trading slightly weaker, so I'm going to trade about 1,302. I think the market could, down and then up. Okay. Here's the DAX 30. So I was bearish here, but since this breakdown, we had Kim Jong-un and Donald Trump looking to meet up. You have strong non-farm payrolls, but low inflation. You have trade wars that might not become trade wars, but that could easily escalate. You have all these different macro fundamental factors influencing things, and right now it looks like we're going to be stopped out here. Could potentially be, but the trick to trading many times is to stick to your idea and stick with your original stop loss until proven otherwise. So the idea was to sell here at 12,103, stops on the other side. I still think it can come back down to the entry, and then we'll see if it continues to go down again. But for now, as long as it's capped by this level, there's no real reason to change the bias. And about stock markets in general, to give you another little idea, um, let's take a look at the S&P. So obviously, if you're trading in the US, it's very difficult to trade these unless you want to open up trade them via ETFs. But if you're trading in Europe or anywhere else, it's not a big problem to trade S&P 500. But here in March or February 5th and February 9th, the whole world was screaming to you, sell, sell. And you had these guys that were like perma bears. You need to be careful. Perma bulls are people that always think the stock market is going to go up. And then you have perma bears, which always think the market is going to go down. I know one perma bear that used to work for Daily FX I used to work for, and then moved on to CMC, and then moved on to another broker now. And this guy's been bearish since I know him. So 2011, 2012. And he won't admit it, but he is always bearish. And it's hard to make money if you're always really bullish or always really bearish. Now, what is interesting here is that when the market declined, everybody was extremely bearish. And on tradecaptain.com, I was uploading article after article telling people that, yeah, okay, the market moved down, but it's probably going to be limited. And it's not just me saying that. I was looking at the CNN Fear and Greed Index. And for example, here's February 9th, February 5th. Here's February 9th. So this is when the market moved down first. S&P has almost plunged by 10% from this year's high of 28.77 as the market worried that the Fed will aggressively raise interest to combat inflation. I talked about the VIX, how this was at like overbought levels, fear and greed, how it's coming down to support, and in essence hinting that probably time to buy. Here's even better at February 9. The market was testing the 200 moving average for a second time on the way down, and the fear and greed index now was at the lows. Obviously, there's nothing guaranteed with any of what we're doing, but what I did is that I bought. So I bought down here. Bought the first time here on the 5th when I did the first article, and then I bought again here on the 9th. So obviously in the beginning I had no idea if this was going to stabilize, but all the science made sense. So I bought here, market bounced back up, booked profits, and then continued to head a little bit higher, and then it went down again and moved all the way down, and then when it looked like it was going to bottom out, I bought again up to this level here. And obviously I didn't know if it was going to stabilize, but I bought here. Stops went down here, like extreme stops, but on the other hand I had much bigger positions than usual. And then the market went up, and now it's down here. And again, it's all about that crowd psychology. Crowd psychology. When everybody's looking at the same things, analyzing at the same time, it could be time to actually do the opposite. Now, I'm not sure if it's going to work out, but for example, today, if you click on technical analysis up here, or actually here, Yuri is bearish. So this is Yuri, and he did this analysis, and he thinks the market is going to head lower as long as we're below this level, which is very, very different to what everybody else is saying. Everybody else is saying, stock market is going to go up. Everybody else is saying, well, Donald Trump and North Korea's leaders are going to meet. But this is obviously a play against that. Is it right or wrong? I'm not really sure, but it is important to get different from everybody else. Anyhow, enough about this. Guys, I want to thank you so much for watching me this morning. You've been great. I will see you tomorrow at 9 a.m. London time here at Light Trading Room. If you're interested in, get more of your questions answered, we do have clients only, so that will be Amana's clients only webinars here in the premium section. In the premium, you can join webinars, which is free. It's called the basic level. If you download a demo account from Mana Capital, you're gonna get quarterly outlooks and premium educational videos. This is quite neat. There's a few good videos there which are educational. And then you have the real account level, which gives you all of this, plus the ebook, trade signals, and webinars with myself. If you want to know more about this, just click here on premium. If you're ready to go, I mean, you can just sign in anyway, and you can see how it looks like with a free account. You click on register, fill out your info, and then that's it. Okay, guys, have a great day. I'll see you guys tomorrow at 9 a.m. London time here at tradecaptain.com. Thank you.